Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's closing grain and livestock comments for Friday, August 22nd, 2025. Well, let's get after it. Start with the good news, bad news. December corn finished the day down just a quarter cent at 411 and a half. For the week, these corn finished up 6 and a quarter cents. November beans finished the day up 2.5 cents at 1058 and a half. We had a high of 1062 and three quarters. For the week, here we go. November beans up 16 cents. Moving over to the wheat, we had contract lows across the board. No way to dress that up. Put lipstick on that pig. December wheat Chicago down 2.5 cents on the day, 527 and a quarter. However, for the week, it was a quarter cent higher, so we managed to eke out a small gain for the week. Looking at spring wheat Minneapolis, December. Also, new contract low. We settled today unchanged on the day at 590. We did settle up a penny on the week though, so there you go. And the one disappointment in the week, it's got to be Kansas City D Sweet, settled down 5 cents today at 521. The contract low at 519 and three quarters, which is what we're leaning on right now. And for the week, however, December, Kansas City finished down 7.5 cents. Um, all in all, a really good recovery in the beans. We'll see if it can drag corn with it. The crop tour is going to be out. We will get commitment to traders. My guess is the funds have flipped long corn. It's probably where they're going to stay. Excuse me. I wish they were long corn. Good Lord. No, they're on long beans now, probably. And they're going to maintain their short positions in corn and wheat until something shakes them out of it. And it's got to be bigger than a 15-cent rally. Quite honestly, they're not going to blink on that. Moving over to the livestock. Well, it happened again. October fat cattle hit 238.125, new contract high. Finished the day up 3.15. Finished the day settled for October fats at 237.87. September feeders hit a new high. You're gonna like this, 363 after trading as low as 357. People were waiting to see what Chairman Powell said, and when it was bullish, boy, we were off to the races. Up 4.65 in the day, new contract high settlement, 362 and three quarters. And even December hogs got in the game, finished the day up 1.275. It's finished at 84.375. If you look at the deferred months as well, it was nice to see them all up at the 90-cent level. Deese has still got a little bit of work to do. Deese has got to get above 86, but I would be impressed. Go take a look at April, May, June, July of 2026. Those deferred months are giving producers a gift. At some point, this cattle market's going to turn around. If we knew when that was going to be, we wouldn't be sitting here, right? So just maintain your hedge. At some point, it's going to turn. I will tell you this: if anybody's I never used options before. I had some option trades today where we spent $1.50 and moved the floor up. I think it was $14. So pretty good risk reward. That beats making margin calls for $23 if you're short the board. So this rallies like this, these grinding high markets, they are the best markets for producers to use put options. Why? Because you set the floor, there's a cost associated with it, but you don't make any more margin calls and you leave the upside completely open. Moving on to the outside markets, stock market looks like it's going to get that 46,000 print soon. I guess it's time for everybody to start buying their Dow 50,000 hats. September S&P just missed trading 6,500. If you want to know an interesting stat, I ran it today. We are up 25%, about 9,000 points in the Dow since the April sell-off. Go back to April when certain people were predicting, that was it. It was over. The tariffs are going to ruin everything. So just another example of how people's ideas can be very, very costly, especially if they let their politics get caught up into it. I never have understood that, but a lot of people put their wallet where their politics are, and it can be very, very costly. I watched it happen when we had Democrats in the office and Republicans were constantly bearish, and vice versa. Trade the market, don't trade the politicians. And what was the driver? Fed Chairman Powell hinted, he didn't come out and say it, but he hinted that he was leaning more towards rate cut in September. So that's all it took. We're off to the races. Um, if you're looking for help with your risk management, give me a call, 312-638-8868. I'll be posting my private members seminar this weekend, as well as my weekly wrap up. If you're interested in getting more information, look me up online. Give me a call. Love to help you. This is Chris Robinson. Have a great weekend. Take care.